Welcome back, guys, to another video with me, Stocks with Leah. I have with me Devrhoid Davis, stock market investor, and then also host of Beyond the Stock Price. So check him out. I'm gonna have all his information in the description below. In today's video, we kind of go over how we would invest $1,000 in the stock market today, and then also we talk about the companies that have been affected by the coronavirus and COVID-19. So let's take a look at Delta, right? Delta, if you look at their balance sheet, their income statement, they've grown their income quite nicely from 2016, 2017, 2018, 2019. Their net income and things like that have been not as steep as an increase. It's been kind of like flat, even down in some years. So this is not a growth story. So this would be a growth play if you were to invest at these levels. And then just thinking about what's the most important thing right now is for the consumer to come back. What do these businesses need? What do these airline companies need? They need people flying. So
Yes.
In these uncertain times, these economic uncertainty, there's no telling and there's no answers right now for when this will be over, when economic activity will go back to what it was, and even if there will be a V-shaped recovery and we'll get back to the pre-coronavirus levels very soon, or if it'll be kind of like a U-shape and we'll just have moderation and consolidation at levels. But it's just kind of a risk right now to tell. So I don't want to make this too long, but all in all,
That's fine.
Delta Airlines, like, I would say it could possibly be a value play right now because it's going down a lot. The PE ratio is very low right now.
I think when last I looked at it was around 3.46 or something like that.
Yeah, so it's very low right now. So I could see it as a value play. You would just have to look at the risk reward ratio right now. But at some point, I believe in the future that obviously people will need to fly. People will be flying around again. It's a big airline company. The government is helping out. They just drew down some money from their credit facility. And like I said, the government is helping them out. So with that in mind, I don't see a risk of bankruptcy or anything like that in the future. And at some point, people will need to fly again. So they will get back to the pre-coronavirus numbers at some point. I don't know what that point is. So it could be a value play if you invest in these levels for a while to come. So not looking at the short term really, but looking at the long term. So that's one thing for Delta. For Carnival Cruises, I think it's a little bit of a different story just because, Carnival Cruises and all these cruise lines, like, they don't register in the US. So they register in all these different countries outside of the US, just like tax purposes. And for this reason, these companies were not included in the government help. So they have a little bit more risk, I think, at the point of like bankruptcy and all these different things. So they're a little bit higher risk for things like that. So I would just say I personally would not invest in like a cruise line right now. And also just thinking about when we get back to economic activity, people are still going to be worried about their health. They're still going to be worried about all these different things. So, and a cruise is one of those vessels that is, I just feel like it's like infection central, and you have all these people together on one boat and then you're stopping at different places. I just feel like the risk reward ratio is not where I would want to invest in it right now, but for other people, they may see it as like a value play and to get in right now. What are your thoughts on like those different types of industries?
I would agree with you. I think certainly over the long term, and we'll get back to talking about that for like for the different types of investors, how they might want to look at the markets. Certainly though, in the case of airlines, what we do know for certain is that a lot of these airline companies, they're large and they are few. So there is a very large capital expenditure that is required in terms of starting a new airline. So it would make sense to me that the government would want to sort of support these companies to try to avert the worst case scenario, which is them going bankrupt. Additionally, when you have companies of these sizes, typically, and if they're as long-standing as like a Delta or a Southwest Airlines, then what they do have also is they have the credibility of their name, which allows them to kind of source capital through various different means. For example, they could decide to approach like an accredited investor who would provide some form of backstop for the bleeding that they're currently undergoing. Additionally, they could always come to the capital markets in order to sort of raise additional funds, whether that's via a preference share issue or rights issue or something like that. So in terms of the airlines, I do think that over the long term, they do represent more of an essential service than, say, a cruise line or that the cruise industry, which represents more, in my view, of a discretionary spend. So in terms of the, as you mentioned earlier, the risk reward ratio, I would say one is safer with the airlines, especially if they're looking over the long term and they're adopting somewhat of a value investing philosophy around investing in those stocks. So if you're looking, say, 10 years, 5, 10 years, 20 years down the line, quite likely these companies will be more profitable at those points in time, and we would look back at this time and say what a bargain they were. And I'm considering also the fact that the current impact on their businesses might be such that total earnings for the year is significantly lower than they were, say, a year ago or 2 years ago. I can imagine certainly where revenues would have seen a massive fall off in the airline industry. Some analysts are projecting an 80% fall off in revenues for airlines over the next, say, 6 to 9 months. And that is certainly, that's certainly possible because, as you mentioned earlier, we don't really know where we are right now in terms of the true impact of the COVID-19 virus on these companies or on the economy itself as a whole. That is truly yet to be seen. So certainly I would be leaning more towards the airline companies if it was that I was investing for the long term and particularly investing with a small amount of capital at this point in time.
I agree. And I can't wait for the numbers to come out, like when they have their earnings, just to see the impact of all of this.
Right, because then it would be able to quantify to a more certain degree what impact the virus and the shutdown basically has been having on those companies. Our approach has been, we call it a 1/3 strategy. So we're still looking to participate in the market based on the fact that some of these value companies are down as significantly as they are. We're seeing value companies that are down 40%, 50%, even as high as 70%. So our approach is to still engage in these value companies, those that we do assess and realize that they are fairly strong companies, whether it is they have a brand advantage or their balance sheet are significantly stronger than their competitors, or it could be a situation where they provide an essential service and they're not as much afflicted by the COVID-19 situation. So we're continuing to invest in companies like those, applying like a staggered approach to deploying capital. As we were discussing yesterday, we don't necessarily know where the bottom is. We do think that it's possible that companies' prices could fall back, probably even to levels lower than where they last settled, based on the fact that we don't think the full economic and the real impact of the COVID-19 virus has been incorporated or has been accounted for in some of these companies, particularly those that we know are truly susceptible based on the industries that they're in. So we're taking a very similar approach, a very conservative but yet optimistic approach to value plays in particular.
Thank you guys for checking out this video. If you really like this video, please give me a like, subscribe to this channel if you want to see more videos like this. Leave a comment down below, like what companies are you looking into right now during this like pandemic? Like which companies would you invest in right now? And then also, if you enjoy this talk with Devrhoid Davis, please check out his channel. It's in the description below. He does a lot of videos just like this one on like stocks, and he provides a lot of value and insight. So please check out his channel. And thank you guys for watching. Make sure to like and subscribe.